I think a lot of this is, of course, riding on the hope that, we're going to see a recovery in the demand side, but that's still subject to some risk in the sense that, it assumes that we don't see, for instance, a second wave of infections. In terms of what we think in the OPEC Plus announcement, we had perhaps hoped for a stronger messaging of intent with tapering of the cuts on hold perhaps till the end of 2020. We're forecasting Brent crude to average $35 a barrel this year and then higher into 2021 to $44 a barrel. Of course, the key, as you mentioned, the GCC economies, the Gulf in particular, is quite exposed to this, and the outlook depends quite significantly for oil. We're forecasting fiscal deficits for most of the key GCC economies, including Saudi Arabia at around an 11.8% fiscal deficit. But much depends really on how the OPEC Plus cuts evolve through the end of 2020, and not only for the fiscal side, but also for the growth outlook.
How worried should investors be, given where we are today?
So I think there's a couple of things, and I think it's also important to perhaps differentiate within the GCC economy. So if you look at Saudi Arabia, I mentioned that we're forecasting a fiscal deficit of just over 11% of GDP. We've seen a number of measures on the fiscal side announced by policymakers. So that includes the tripling of the VAT, some cuts to citizen allowances. So I think it's very clear that in the context of the current oil price environment, the policy emphasis is on making sure that the fiscal position remains sustainable and the public debt burden remains low, and they want to sort of remain within the guidelines that they've provided for the borrowing target. Now, what this means for the private sector, of course, is that, we're going to see a recovery, which is our base case, gradually beginning in the second half of this year. But as I say, there's a number of risks to that. Number one, of course, is the assumption that there isn't a second wave in itself. But beyond that, I think some of these measures that have been announced on the fiscal side are going to impact non-oil growth adversely. And as such, we're expecting the Saudi economy on a headline level to contract by around 5% in 2020 and recovering to around 2% next year. Similarly, if you look at the UAE, for instance, now Dubai in particular is, of course, less exposed to oil prices directly. But we are now emerging from a pretty significant disruption to economic activity over the past month or so. And I think, again, it remains to be seen because so far what we have is a situation where employers have been reluctant to let go of workers amidst the lockdowns in the hope of recovery and to try to avoid rehiring costs. But ultimately, to us, really this is a question of how quickly and sustainably private demand for goods and services can come back to normal.